When someone has done a good enough job of investing, not overnight, but over many years, piling up these investments that are now producing income, that's really what I consider wealth, security, and financial freedom.
Welcome to another episode of Kiss My Assets. I am Rocky Peterson, Vice President of Investor Communications, and I am sitting here with Josh Manwaring. He is a financial advisor. Do you have a fancy title?
That's pretty much it.
Mr. Financial Advisor.
Right.
And he's sitting here with us to give us an overview on stuff that material that he is very good at. And he knows a lot more than I do, so I'm going to be asking mainly questions instead of actually giving any verifiable or non-verifiable information, because that's what you're here for. To start off, I wanted to ask if there's one thing that you could learn, time and money are no object, if there's one thing that you could learn or a skill that you have always kind of wanted, what would it be?
Wow, I'm a little bit boring, but I am going to tell you that it's something that I have a lot of friends who are good at this, and this is going to sound crazy, but I want to learn how to smoke meat.
Smoke meat? I thought you were going to go in a different direction, and I'm delighted for a family-friendly podcast like this one that it's smoking meats.
Yes, I love to grill, but I would love to learn how to get really good at like smoking meat and buy a smoker and learn that. But so my follow-up question to that, because I actually do know something. I didn't think I was going to know anything on this podcast. Turns out I'm the expert. Would you do the tried and true old school smoker where you have to kind of tend it, or would you do like a Traeger? Definitely a Traeger.
Okay.
Definitely a Traeger.
So you're not necessarily a purist. You just want the smoked meats.
Exactly.
That's how
Absolutely.
I was. It was a big fan favorite around my house.
Nice.
So I fully support that. All right. So my next question, and it'll kind of get into more of what we're talking about with you, as it specifically relates to assets and how they're allocated between the market and real estate. Of course, that's stuff that we're interested in. But my first question is, what's the most common question you get when people come see you to discuss their finances?
Well, the interesting part is everybody is in a different place. And so when people are mostly interested in investing or starting a retirement plan or starting some kind of a plan, most people need some kind of a map to where to start. And so what I always try to talk to people about is starting up to do something is better than doing nothing. Some people they decide that they want to put money in a savings account. That's way better than doing nothing. And so when you get down to the nitty-gritty of where you're going to invest your money, that's kind of secondary to, hey, do you have any money to invest? What are you doing now? When do you need the money? And then we can really start drilling down into the best places to invest it.
Mm-hmm. Okay, well, that makes sense because, of course, for every person that comes in, there will be a different situation. Do they come, like, what precipitates them coming to you as opposed to just trying to kind of wing it? Or, there's so much information out there anymore. It's not if there's information, it's how to edit it.
Totally. And that's one of the challenges now with all of the available information. Some people feel like they can create an investment strategy based on information that they've gathered, and some people totally can. Mm-hmm. And what generates people getting interested in working with maybe an advisor, or maybe they've started some things and they're just trying to figure out how these things can connect. Maybe they have a rental property. Maybe they've invested with Neighborhood Ventures. Maybe they have a 401k at work. Maybe they have savings someplace. And they're like, how do all these things coordinate, and how do they actually make a plan? And a lot of times that will spur someone to say, maybe I could talk to some professional that can help me kind of line these things out, put them under one umbrella so all of these things work in harmony with each other, rather than having kind of this alphabet soup of different investments.
Oh, I think that's a really good way to put it, because in everyday life, we don't just try to wing it when it comes to professionals that we trust. I mean, obviously, like a dentist, I'm not going to go drill my own teeth. I actually barely go to the dentist because I hate it so much. But
me too.
But we sort of don't put the amount of the same emphasis on a professional helping us with our money, because I feel like there's sort of this impression that we should be able to do it ourselves, that if we're disciplined, if we're smart, that, like you said, if even when people are doing those various things, that there's like this, that there's this impression that we just should know it all, or at least be able to put it together ourselves. And, sitting across from someone like you, to be able, that's done it 100 times, it seems almost silly to try to do it yourself.
Yeah, no, and I think that the point about that is people have lives. They're super busy just trying to survive. They're super busy trying to make ends meet. The idea sometimes of just having a 401k or an IRA is mind-blowing to some people. And then when they drill down and they have to make all these decisions about which mutual funds to choose, and then they hear opportunities like a neighborhood ventures potential investment. It's like, wow, that sounds really, really cool. Should I do that? Is that good for me or is it not good for me? And sometimes when you have a good trusted advisor, they can really help you and encourage you to look at those kind of options, because really when we start helping people, we're really going to start looking at where they're at now. And I always tell people it's really important to start out to have some savings. Just have some really safe money that's just in savings. Then make sure your income is okay, which is your job. If you're retired, your investments are going to actually provide you income. But if you're not retired, your job's going to provide you some income. Then the next bucket will be your investments. And that's where there's just the universe of things to invest in. And it can be overwhelming, but people have to understand that if they're going to want their money to grow and they're going to want to build wealth, they can't keep that money asleep in a savings account. They need to get it working some way. And some people are just scared to do anything, which I get, because maybe they've tried something and lost money. But understanding that if they don't need that money tomorrow, they need it 10 years or 20 or 30 years from now, they've got to get that money to work, because it needs to do things that they can't do just sitting in a savings account.
Yeah, that's the way that you put that is so true. When you talk about people have busy lives and the amount of time and energy that they devote to, to one thing or another, it's like when you say yes to something, you're saying no to something else. And people want to be able to enjoy their lives, be able to be confident that their money is working for them, like you said. And we find that our investors, that's one of the main reasons they like us so much, is because it's truly passive. Even if they're interested in real estate, they feel like maybe I could sort of do that. Ultimately, they already have their life's work, and they already have their families, they have their hobbies. And so we take that off their plate, much in the same way that you would take sort of that worry or that nervousness that they're either not doing enough, they're not doing it fast enough, they're not doing it smart enough. And you kind of give them the confidence to say, yeah, you're on the right track. Here's some options. So I appreciate that contribution. When we look at, of course, we're really interested in real estate around here. It's kind of our jam. But I do know, like you said, there are tons of investment opportunities. Can you break down your ideal sort of ratio or your asset, kind of go into that, what you recommend for people and kind of what your experience has been?
Sure. And keep in mind, every situation is very, very different. But one thing that Dave Ramsey says that I really like, he says, if you have your money all in one place, it's like manure. If it's piled in one pile, it stinks. But when you spread it out, it helps things grow. And so it's important.
Right.
I'm what's called a fiduciary advisor. And people come to us because they want someone to manage their money so they don't lose it. So my primary job is to try to spread it out. Mm-hmm. And most people should do that. That doesn't mean everybody does. I've got several clients and people I've known over the years that's all they own is real estate, and they've done fantastic. But what I find is when people kind of spread their investments out and have different investments doing different things, it just gives them a little more peace and security, because not everything grows at the same rate. Mm-hmm. But again, when someone really looks at how to allocate, they should always have some money in savings, okay? They should also have some money that's liquid and growing in other places. And then things like real estate should be another bucket of money, because real estate's a different investment. It's going to be probably safer than the stock market. it's probably going to grow as good, but it's not as liquid. So they have to make sure that the money that they invest in real estate is money that they're not going to need next week when their air conditioner blows.
Right.
And so having a piece of your money in alternative things like real estate, we call it alternative because it's not the market, is just a fantastic place. And all of my clients who have millions of dollars have money in real estate. That is not something that wealthy people, it's an asset class they own.
Right. Well, we like to call it the market alternative. How about that?
Perfect.
I mean, we are A1. All
Yes.
right. Real estate is A1. I'm just kidding. But not really. But I think it's interesting when you say you have wealthy clients. Is there a difference in the mindset between those that come to you kind of beginning and then those that have attained a certain amount of wealth? Is there a dramatically different, plan or path forward?
Totally. And really what I see the difference is people need to get what I call your house in order. Once they have their income all set, where they're basically making more than they're spending, that gives people security. That also gives them the ability to invest money. And at some stage in their life, they've invested so much that those investments now will replace the income. That's what I find that's what I call security. When someone has done a good enough job of investing, not overnight, but over many years, and piling up these investments that are now producing income, that's really what I consider wealth, security, and financial freedom. When they don't have to work, I call it, let's get you to a work optional plan or retirement. Yeah. But work optional means, man, I've got enough investments that I don't have to go to my job every day, and it just gives people freedom.
Well, absolutely. If you don't have to go to your job every day, then all of a sudden you get to explore other businesses that you may have wanted to start, or you get to develop a hobby, or you could start smoking meats, for example.
Right.
Just 24 hours a day, just have it be a big meat fest.
Totally. Oh, I love it.
I mean, that's your idea of security. That's great,
Yep.
Yeah. Mine would be playing tennis and golf every day.
Ooh, I could get on that one too. And pickleball.
No, actually, I'm going to stop you right there. Okay. I have tried. I really tried. And I don't know. There's just something I cannot get into it. I played a number of times with my really good girlfriends, and they're all about it. And it's just kind of yawners for me.
Fastest growing sport in America. Just keep on it. It's a hard one to not like.
I think I'll just buck the trend and just be the irritating tennis player that everyone's like, you would like it if you just tried more.
There's always going to be tennis.
Yeah.
Well, maybe not. Those pickleball courts are taking over, so we'll see.
All right. Well, that's my idea of security, so don't you pickleballers rain on my parade. I need it in like 40 years.
I hope you're enjoying the Kiss My Assets podcast. This is Matt Sorensen with Directed IRA. We are a preferred provider for neighborhood ventures for those who want to invest their IRA in real estate. We're an Arizona trust company. You can come to us in the office. If you want to do it the old-fashioned way, reach out to us online at Directed IRA. We've been helping clients invest their IRAs in real estate for years. We've helped thousands do it successfully. Let us know if we can be a resource to you. You can learn more at directedira.com.
Yeah, so when you talk, and go into a little bit more, if you would, about like first steps. Like you talked about savings. I'm going to see if I remember. Okay, savings, liquid, investments. Is that kind of the...
Yeah. So you got your savings bucket, and then you have income. So you have to have
income,
a job.
That's right.
And that might be your job if you're working, or if you're retired, it's things providing you income. And then you have a bucket for growth. And that growth bucket is really where your investments lie. And in that growth bucket, a fiduciary like myself would recommend somebody to spread it out. Remember, you spread things out.
Yes, I remember the stinky story.
Yes, and when you spread it out, things can grow. And it doesn't mean that if it's in one investment, it's not going to grow, but when it's spread out, it gives you the ability to not get super nervous when the market goes down, whether that's a real estate or maybe you're in cryptocurrency or maybe you have some stocks and bonds.
It allows you to ride it out.
It allows you to ride it out.
Right.
And so that's where that allocation of investments can make a big difference in someone's life. And so as a fiduciary advisor, we're going to say, let's have money in there. And typically, and this isn't in every situation, but typically that alternative investment, things like real estate, might be somewhere between 10 and maybe all the way up to 30% of your investments could be in something like that. And in the past, my clients who want to be in an apartment building, typically they had to have a high net worth. They had to have like $1 million net worth to participate, which was no fun. And now with places like Neighborhood Ventures, which one of the few that I know, anybody can almost participate. And that's where some good opportunities for just the average person can invest.
Well, we appreciate you staying on top of those options for your clients. Obviously, it helps us when people like yourself that are knowledgeable and professionals understand it well enough to say this might be a good option for you.
For sure.
I noticed on your on your website that you are not associated with a big like Wall Street type firm. First of all, why did you decide not to kind of go that route, and what are the benefits to, in your mind, for someone to come see you as opposed to, like if I'm not mistaken, like a Raymond James or Edward Jones or something like that?
Yeah, no, I appreciate that question because I've been in the business now about 20 years, and about the first 15 years I was affiliated with big firms. And when you're affiliated with a big firm, you're what's called a broker. And what that does is you're basically working for the firm. You're not really representing your client. And so they will provide you products to sell your client. And it's really hard to be indifferent when your firm says, hey, if you sell this product, we're going to juice it up a little bit for you on the commission side. And so it's about 6 years ago where I moved over to the fiduciary side on the independent side. And that just gives me the ability to offer the clients what they need. I have the whole universe of investment options, and I get paid a little bit differently. Instead of getting paid commissions, I get paid by a fee that I charge the client every year to manage the money. But it helps me to be very clear in my recommendations, and it just helps the process be a little more trustworthy, where I'm not incentivized to sell certain products for my firm, and that's the difference.
Oh, well, of course I like that. I think anyone listening would really like that explanation. It does put a little bit more pressure on you, though, from the standpoint that you're not just peddling these prepackaged products, which, to be fair, I mean, they do grow people's money. But you have to kind of go outside of like those products to, like you said, figure out what really is going to benefit your client. So, I mean, it does put a little more pressure on you. Do you feel like you have to stay more on top of either investment opportunities or trends in order to be able to do that?
For sure. And the nice part is most of those products that the brokers would sell, I have access to those at a very discounted price. And so I don't necessarily manage my clients' money day to day. I'll always hire a professional money manager, somebody that manages a specific portfolio of stocks or ETFs. And so I don't have to do the day-to-day things. There's professional managers to do that. What we do is the more our clients earn in their account, the more I earn. So if the clients do better, we do better. And it's more like we're sitting on the same side of the table rather than just always trying to be selling them something. So that's the difference.
That's really interesting. I didn't know that there was that nuance even within the financial advisor or the fiduciary advisor. You mentioned earlier that you feel like anywhere from 10 to 30% of someone's investment portfolio, is that how you say it? Okay. Could be in alternative investments like real estate, which I said we're actually A1, but that's fine. We can agree to disagree. You're the professional and I'm just the hack.
Hey, this is a pretty good gig. It's good.
Do you feel like there's ever a situation, either because of age or because of wealth, that would change?
Typically, as a fiduciary, I just want to have it spread out.
Yes, it is stinky.
Now that doesn't mean that an investor can't invest all of their money in real estate, because several do. And but when they come to a fiduciary and say, how would you do that? I always say, you just want to spread it out. And the biggest reason isn't necessarily because markets change and they grow at different rates. It's kind of the liquidity question. Is most investors, they love investments, they love their money to grow, but they also need liquidity. And real estate, it doesn't provide the liquidity that people need. That's why they need to have some money in other places.
That makes perfect sense. All right, so kind of as we're wrapping up here, what is your personal portfolio look like? No, you don't have to tell me numbers. You can, or you can. I mean, by all means. What does that look like?
Yeah, so I've always liked investing in real estate, which I continue to do. And then I just have a portfolio. I'm about 15 years out from retirement.
From smoking meats?
Yes, from
Full
smoking
time?
meats, right. and so I have a pretty, growth-oriented portfolio of individual stocks and ETFs that, have done fantastic the last several years. And then, some money set aside in cash. And so I practice what I preach on a daily basis. And it just makes me feel like I've got a nice diversified portfolio. But at the same time, I don't want that money to be extra safe because I don't need it.
Right.
Until 15 years from now. So that's a future me. So those funds will be invested, for, way down the road.
All right. So my last question, and I actually stole this from Jameson, is what is your idea of wealth?
So yeah, I think my idea of wealth would kind of go back to what we talked about before, where someone can be financially independent from a job, from the government, from inflation, where they have created a situation where they don't have to rely on anybody else. And that financial independence for me is really the idea of wealth. That could be someone that has a couple $100,000. That could be someone that has several $1 million. But it's that independence that just gives people that freedom and what I think wealth is.